Welcome back. I'm Pratap here. Today is 6th August 2024. In this video, let us evaluate the performance of high liquidity zones generated in our yesterday's report. So before analyzing the high liquidity zones, an announcement please. If this is your first visit to our channel, please understand we are providing complete free training on supply demand zone price action. All the training lessons are available at our NeoStock YouTube channel. So at our channel, you click on this community tab, you will get access to this post. This post is having a YouTube playlist link that will take you to all the training videos. You just need to click on this link. I'm clicking on the link. Now we are into the playlist supply demand zone price action course. Here you have 62 training videos are available. The most recent training lesson is lesson 24, zone confluence. So you just need to scroll down to the bottom of the page. Here starting from lesson 1.1, all the training lessons are available in an order. So please go through all these lessons one by one and then strengthen your skills related to supply demand zone price action. I have also provided the link to our Telegram channel in this YouTube video description. So from this video description, please join in the Telegram channel. It will be helpful to you each time when we release a new video or any other important updates. We will provide at the Telegram channel. Now let's get into the analysis of the high liquidity zones generated at the end of the yesterday's report. So we identified from our yesterday's report, we identified two high liquidity zones. One is Hindustan Petroleum. This we already discussed yesterday and we got a trade from this zone. And apart from that, we have one more CIPLA identified for today's trading point of view. And CIPLA is a 75 minutes high liquidity zone. This is a drop, base, drop. We have a drop, 4 base candles and a drop. This is what our software, NeoStock software, identified. And this 75 minute zone is fine-tuned with 15 minutes time frame. So here you have a drop, base, a drop is there. So this is the 15 minute zone, drop. You have a small base candle, again a drop, but it is having a high wick. So that's why till the distal line, the higher wick of this leg out candle, we have drawn 15 minute zone. So this is a 15 minutes fine-tuned zone. Inside the 15 minutes, you need to look for a fine-tuned 5 minutes zone. But interestingly, there is no 5 minutes fine-tuned zone available. See, this is a ERC candle. Then again another ERC candle. Between the ERC candles, there is no base candle. That means there is no fine-tuned 5 minute zone. And many times such kind of zones will be violated easily. But if you look into the previous historic price action, you see here, there are a lot of rejections from this area. That means there is a strong order flow is available. From here today, we got a trade. Previously several times here, first time, second time, third time, fourth time. There are rejections from this zone. That means prices are moving down, reaching here. That means in this area, there is a strong order flow is available. If any in the lower time frame, if any zone is available with price action clue, you can go for an aggressive trade. I already explained the concepts of aggressive trade in lesson 21. If I am not wrong, it is lesson 21.4 or lesson 21.5. In one of these videos, I have explained the aggressive trade and their different concepts and possibilities. That is possible. How we got a clarity? By seeing the rejections in this area, somewhere in this area, prices are moving, coming down. Prices are moving, again coming down. Prices are moving, coming down. This time prices went a little more up and came down. And today again prices came a little more and came down. So before today's price action, this is what? This is yesterday's, say, for example, yesterday's, no, this is today, yeah. If you look like this, if you look into like this price action, now definitely you will get a clue. So this is the 5 minutes time frame. We don't have a 5 minutes valid zone. But in 1 minute time frame, if there is any zone, based on the price action clues, we can plan an aggressive trade. So that's why I went to the 1 minute time frame. In the 1 minute, we have a leg candle, base candle, and a drop candle. We have drawn a zone. This is the 1 minute zone. See here, prices are nearing to the 1 minute zone and then coming down. That means in this area, there is a very strong order flow. Next time, second time also, prices came near to this 1 minute area and again came down. And after that, once again, prices came near to this 1 minute area and again came down. And recent time, just they reached the 1 minute zone and again came down. That means a lot of order flow will be there. And today once again. But you might be wondering, already previously just touched this zone. Can we take a trade? This is not a fresh zone. Yes, many times you will get a doubt whether to take a trade or not. There are two important reasons why we can plan for another trade. If possible, one more trade also possible. Let me explain the reasons. The reasons are, in this area there is a very strong order flow. This is a justification that from here till this 1 minute zone, there is definitely a strong order flow. It may support multiple tests. There is nothing wrong in trying for one more if the risk is very minimal. But still, we will have a lot of doubts in our mind whether really to take or not. Okay, to get 100% confidence we can take. See what happened. Price, we have a ERC candle as a leg in, you have a base candle, you have a drop candle, and again if you can draw a zone like this. LOTL. So you have LOTL. And where is the main source? From where it picked up the orders? From this top 1 minute zone. This is the one below this. But it picked up the orders from the zone and then again a new zone is created. This is LOTL concept. Within the same time frame, if zones are overlapped, it could be LOTL. Generally, when these LOTL zones will be created, in high liquidity zones, these LOTL concepts most of the times it is applicable. That is what happened. If it is a high liquidity zone, from this zone it will pick up the orders and again a new zone. But you will place your orders not in the newly created. Mostly in the old area only you will keep the zone. If the risk is allowed, you can place an order. If you have fear, prices did not reach up to this area, you can keep an order here itself. There is nothing wrong. If the risk is high, probably you will place your order within this area. But whatever it is, most of the times what we observed in high liquidity zones, from the main source. This is the main source. Next time, definitely prices will be reaching to that main source. So this is the reason why we can plan for another trade. We have seen several examples earlier also. If you look into our old HLQ videos, you will see such kind of examples. A LOTL zone is created, then we took the second trade and it was successful. Many people thought it is not a fresh zone, they rejected. So that's why in LOTL is an indication, but it is not a confirmation, please remember. It is an indication, it could be a high liquidity zone. But here I have two strong reasons. One is LOTL is giving a chance for us to take the second trade, and these price action clues earlier indicated this is the area a strong institutional order flow is there. There are higher chances that this zone will give a good trade. That is what happened today. See, prices reached into this area and again then came down and reached the 15 minutes target. This is the 15 minute zone. We have a leg candle, we have a base candle, and then we have a leg out candle. So from here to here it reached. We have from here to here 1:3.5 RR is there. I think 1:3.8, close to 1:4. RR is there from here to here. And what is the profit? What is the ROI? It has given a profit. Let me open. CIPLA has given a profit 6,760 rupees profit, which is 3.8% ROI as per one futures margin cost. Okay, our average intraday ROI is 6%, but today's trade some 2% less than our average, 2.2% less than our average intraday ROI. But still okay, it is close to 4%. It's a very good trade and a good profit. So those who ever completed the aggressive trade in lesson 21, lesson 21.4 or 21.5, one of these lessons, definitely you would have planned a trade today. See, the price action rejections, clearly it is showing in this area prices are coming down, again from this area, again they are coming down, from here again coming down. Definitely there is some institutional order flow is there. But we identified that institutional order flow only in 1 minute time frame. That's why reading the price action is very, very important. All these are all price action mainly tells you different price patterns. These rejections is one kind of pattern. These patterns are giving you indications from one area, prices are reaching, from there they are coming down multiple times. That means in that area there is a strong institutional order flow. Probably in higher time frames it is not visible. It is clearly visible in the lower time frame. And one more reason is, and one more point why we should take today is, many times we have seen 1 minute time frame, the zones are holding the prices. Many times the order flow, institutional order flow in that 1 minute is much stronger than the 15 minutes or even 75 minutes order flows. That means the entire order they kept in this small area, institutions. So such kind of breaking such kind of order flow is very, very difficult. If it is 75 minutes daily, they spread into multiple levels. But in 1 minute area, any strong order flow is there, institutions keep the entire order flow in a small area. That's why it's not easy to break. This is what you have to understand. See, every time reaching, prices are coming down. They are just like that, they are pushing the prices. That is what you observed here, and even today also. See, prices reached and then came down. They never try to reach until this area again today. At what time we got the entry today? At 11:15 we got the entry, and when we exited at 1:15, 15 minutes candle we exited. If I go to the 5 minutes time frame, your entry is at 11:25 and you exited at 13:20. So within 2 hours the trade is completed. And moreover today, most of the majority of the time today market was bullish. Later on it came down. But at 11:25, let us look how Nifty is behaved today at 11:25. So Nifty was very flat here from 11:25 to at least 12:05. But CIPLA started falling from 11:25. See, at 12:05 what happened? Already prices came here. After slowly it reached the target. And this 15-minute zone is also very strong. Why? Because see how it is holding the prices. Sometimes you may feel, one important point I have to tell, sometimes you may feel prices will reach up to the type 2 proximal. if prices reaches this type 2 proximal, you get more reward, right? Sometimes we will be waiting to reach, but here you see here, probably you might not have exited thinking that prices will come up to here. Let me show you in 5 minutes clearly. You might be thinking prices will go further down, but see here, this is how it is holding. So at least after some time, maybe if not here, maybe here in this candle, you should realize this is strongly holding. But see here also, see morning, this is first close. This is clearly holding, not letting the prices to get up to type 2 proximal. Already it holded. From here, from this 15 minute zone only, it pushed the prices. Okay, maybe there are chances that prices will go down, but still it is holding. This itself is an indication you have to exit at type 1 proximal itself. If you missed probably here, you would have exited. This is at 14:10. This is at 13:20. So nearly almost 1 hour after 1 hour, you should exit in case all these prices, see the rejections, these rejections should give an indication the order flow is very strong. It is not letting the prices go down up to type 2 proximal. So definitely you have to exit. This is the way you have to take decisions sometimes. But otherwise, this is a very good trade, very good aggressive trade based on the price action clue, rejections near the zone. See aggressive PA clues, the price action clue, rejection near 1 minute supply zone inside 75 minutes high liquidity zone. So this is about CIPLA. And Hindustan Petroleum, yesterday we already discussed, I explained the complex analysis about Hindustan Petroleum yesterday. We got a trade here. And today anyway prices did not enter into this zone until the last hour of the last 30 minutes of trading session. So that's why we didn't get any trade opportunities in this. Whatever I already explained how to fine tune the zone, the same thing is still applicable here. Maybe we would have looked for a second trade in this zone. The reason is type 2 proximal is still a fresh zone. See here. Yesterday the trade is a type 1 proximal. Type 2 is still a fresh. Especially high liquidity zone, many times if type 2 proximal is fresh, the trade works even if it is second time, many times. Many means 80% scenarios. Still this zone works. You can consider this as a fresh zone, even though it is tested at type 1 proximal. So 80% scenarios, type 2 proximal works in high liquidity zones, the fine-tuned area. So we can still consider this as a fresh fine-tuned area for taking a trade at type 2 proximal. But today price did not enter into this area, we didn't get a trade. So these are the only 2 high liquidity zones identified yesterday. Hope this information will be helpful to you. Especially CIPLA is a very good learning for all the members who are practicing the aggressive trade concept, what you learned in lesson 21. So this is about today's session. Let's all meet again in our next video. Thank you.